What is going on, guys and girls? Good morning, good evening, good afternoon. Welcome back to the channel. And in today's video, we are going to be talking about what I believe to be the most underrated trade in the financial markets right now, which is the commodities breakout, specifically on gold and silver. We're going to have a look at both of them today. I'm going to break down why I think the retracement and the pullback is over for metals and why it's up only from here. So with that being said, let's get straight into it. So what do we actually have? There's a couple of flags that we need to cover. In 6 hours time at 8:30 p.m. my time, we have US CPI data tonight. Now, obviously, this has the potential to influence the trajectory of gold. Do I think it is going to make that much difference? Not particularly, no, but I'm keeping an eye on it. And I want to see how the market responds. I'm not interested in making predictions about what I think is going to happen. I want to see how the market responds to this CPI news announcement later on today. So what do we have? We've got a macro stack. Now, number one, monetary policy is stabilizing, right? The market's opinion is that the Fed is done raising rates. This is good for consumer confidence. This is good for consumer sentiment because it signals and communicates stability. That is a good thing. The market, the debated move being not much is a good thing. It signals stability. This is good news. Now, the Middle East risk is currently unwinding. So we have US and Iran reportedly close to coming to an arrangement with the reopening of the Strait of Hormuz. This is good news. So gold is holding a bid while this trade fear is starting to unwind. There is less trade fear going on right now. That is kind of the showing of the poker hand, right? It's not a panic bid. This is we're seeing a resolution at the end of the conflict. That is good news. Resolution at the end of the conflict is good news, right? It's not additional tension being bullish for gold. It's the fact that the market is starting to price in the potential for the end of the war. Okay, risk appetite starting to come back. S&P 500 is making all-time highs. We've got record prices for the S&P. There's arguably a bit of a Nasdaq catch-up trade going on right now, but the S&P 500 is making all-time highs. You can call it whatever you like. Investor risk appetite and consumer confidence is shown in the S&P 500, meaning we're making new all-time highs, meaning consumer confidence is high. Doesn't need to be overcomplicated. That is a good indication of consumer sentiment, the S&P 500 being at all-time highs. Now, it measures investors, not consumers, but same conclusion, right? Nasdaq catch-up trade is on the cards. We've been talking about this inside Quantum Traders for the last couple of weeks. It is my opinion that the Nasdaq catch-up trade is currently playing out because it's up almost 10% since the July lows. I think it moved 10% in a handful of days. It's still slightly below the all-time high price levels. So I think that is the catch-up trade to play. S&P 500 running first. Now, Nasdaq, it is only a matter of time before it plays catch-up. That is obviously potentially late to the party in terms of a live trade. So what I'm using that as a confluence stack to build around my existing bias, which is that I think gold and silver are going to perform well. Do I want to get long Nasdaq and play the catch-up trade? No, but I want to stack these confluence factors together and use them to strengthen my analysis for the direction that I think the overall market is going in which case this is gold and silver and they're going up, right? So central bank buying, where China fits into this whole scenario. China's US Treasury holdings are reducing. I'm going to say that again. China is reducing their US Treasury holdings. They are under, I think it was $1 trillion since April 2022. They sold 41 billion in March, and they are no longer the second largest holder. I think they're the third largest holder. Short version and layman's terms means China is selling US Treasury bonds. That's not good. That's good for our bullish thesis for gold, but it's not good if you live in America. But if you rely on the American economy and you think it's going to go up forever, that's not good for the American economy. In that same period, the PBOC had a gold buying streak, and specifically, their gold buying streak has hit 20 straight months. The PBOC has been buying gold for 20 straight months. Specifically in July, they bought 20 tons of gold, which is their biggest monthly add since October 2023 to a record 2,366 tons. Now, China's run its treasury book down underneath $1 trillion. It's bought gold every month for the last 20 months in a row to a record number. They're moving away from paper and they're moving into metal. Now, I don't personally subscribe to the Stone Age narrative that we're going to go back to some kind of prehistoric way of using a medium of exchange, which is gold backed. I don't agree with that. But what I'm trying to do is find asymmetric ways to outperform the rest of the market. And one of the good ways to do that is follow the smart money. And it is my opinion that China is much more intelligent money than the US is right now. China is the dominant superpower. They have been for quite some time. America is just in denial about China being the dominant superpower. Therefore, China buying gold aggressively and selling US Treasury bonds is a good indication of where smart money is moving into, out of paper and into metal. Right? The biggest balance sheet, one of the biggest balance sheets on the planet, is making the rotation, and they are continuing to do so, right? Now, my thesis for the rotation into commodities. Gold, approximately 4,400 as of this recording right now. It's up 10% this month. It's up about 30% on the year. It's just broken out of a 6-week consolidation in early August with a bullish weekly candle close. We're going to look at this on the charts in a second. Silver, we're going to cover after this. Now, every input on my higher time frame chart is pointing me in one direction right now, and that is going up. Higher time frame breakouts, bullish weekly close, breaking out of a consolidation range that we've been stuck in for quite some time. This is my focus for the coming months. This is a hybrid swing trade. This is not a get in and out in 2 hours. This is a directional rotation for me to position into a hybrid swing trade that I can sit in for a couple of months. And that's how I'm personally going to look at my exposure to the gold and silver market in the coming months. This is where my focus is going to go. Short-term upside, potential for a higher time frame, swing thesis to play out. Manage it along the way. So let's have a look at the charts. Now, on the monthly time frame here, we're halfway through August right now, so we're a long way away from an August close, but we've got a nice monthly shaping up at the moment. The chart that I want to illustrate, and the one I've been kind of laser focused on, is this weekly time frame. Gold has essentially retraced from its highs around 24 to 29%. So we've been in a mid to high 20% retracement range on gold for quite some time. We've sat in there basically since June. So we've been in a 2-month oversold retracement on gold. Largest commodity asset class, you're talking about a $32 trillion asset, is 29% off the highs. So does it mean anything right there? No, not for me personally. It means I want to watch and I want to see what happens in this area. What I would love to see is one of 2 scenarios, and then I can respond accordingly. One of those scenarios is a bearish sell-off underneath here, confirming that gold is now going to make new lows. We're going to break underneath this swing low, which formed the higher low prior to this breakout, and then I'm going to have a bearish thesis. Or we're going to break out of this consolidation on a weekly time frame, giving us new highs, and then I'm going to have a bullish thesis. Don't care which one happens, but currently one of them has happened. We've had a bullish engulfing weekly close on the weekly time frame for last week, which has given us this daily price action. Now, inside QT, we talked about this on a webinar a couple of weeks ago. I've basically got these 2 lines drawn in, and those 2 lines for me indicate whether I'm doing nothing or whether I'm doing something. What do I mean by that? Nothing means anything between these 2 circles, as in all of this stuff here, is no man's land for me, no trade zone. Why? Because it's range bound and it's messy, and I cannot clearly define where I'm right or wrong, and therefore no trade thesis. So as of last Wednesday, a week ago today, we had a daily bullish engulfing close, breaking us out of this 42.05 swing high that's been capping price for the last month or so. We didn't make new lows underneath here. We made new highs above here, giving us a change in market structure on a daily time frame. Looks great. That momentum continued on Thursday and then into the week with the Friday close, which gave us that weekly bullish engulfing candle close. Now, this is the bit that I think that people are missing out on, is we're not talking about a meme coin here. We're not talking about a low cap alt. We're talking about a $32 trillion asset class moving 9% in about a week. That does not occur by accident. That occurs because there is a rotational shift. I believe that rotational shift is coming off the back of a little bit of a slowdown in this tech mania with AI and robotics and data centers and all these tech-related stocks that have just been going completely bananas. I think we're seeing a little bit of a rotation out of that. I think we're seeing a little bit of a rotation back into other asset classes. And I think the most obvious one is the largest commodities class in existence, a $32 trillion asset class, being down 29%. I think that's what we're seeing. I think we're seeing a rotation back into gold. I think we're seeing it because of the reasons that I just explained before. And we are now seeing that evident in the charts with a technical breakout on the higher time frames. So what does that mean in terms of positioning? Well, To be completely honest, I have some small positions which I'm already in. The majority of the larger ones that I wanted to get in, I've actually missed my entry. My entry would have been on a retracement into here. I didn't catch the initial breakout. So for me, my next point of entry is the retest. We then made small incremental breakouts above here, which I've taken small trades. But my largest trade is going to come on any meaningful pullback. And what do I mean by that? A meaningful pullback, if you were trading gold in 2025, you will notice that gold trended very easily and very cleanly throughout 2025, at least for the bullish run of 2025. And what it did was it basically made swing highs on a certain day. It retested those highs the following day or same day later in the session, and then it continued to push to the upside. The overall market structure, it's not mega clean here on the 1 hour time frame, but on the 2 hour and definitely on the 4 hour, you can see here we have very clean market structure. This is clean highs, clean swing highs, clean swing lows, clean swing highs. We can draw them in here for anyone that watches this video that doesn't know what I'm talking about. Swing high, swing low, swing high, swing low, arguably that wick, swing high, and then again with the swing low. And you're basically just drawing these lines in. There's another one we could draw in here, going level by level. If we break out to the upside here, you got a breakout trade on the cards. If we break and retest this, you got a break and retest trade on the cards. So for me, this is nice, clean price action. If we compare that to the price action for the previous month, look at this. Look at all this messiness in here. Look at how choppy that is. No clearly defined trends. Price isn't clean. You get a breakout. It rolls over into new lows. It's gappy. It's messy. It's not clean. This is clean, trending, bullish market structure. So for me, I'm looking at ways to incrementally add to my gold longs on these retracements, because my higher time frame thesis is that the commodity consolidation is complete and that we are now going to see better prices for gold and silver in the coming months. That is exactly how I am intending on playing it for the gold market. Now we can have a quick squiz at the silver market while we are here. My thesis is basically the same, except there is a small caveat. So higher time frame wise, monthly and weekly on silver, they're somewhat similar. The negative confluence factor for me on the weekly time frame for silver is that we basically smashed into the weekly 50 EMA, which is a moving average, this red line you see here, and we decelerated and came back a little bit, closing on or around the weekly 50. Didn't love that. Bit of a negative confluence factor. However, something that silver has going for it that gold currently does not. I'll just fix up some of these charts so this is a bit clearer. Something silver has going for it which gold did not is silver has an inverse head and shoulders pattern, which you guys, if you've been following me for some time now, you will know I love an inverse head and shoulders pattern, especially one where I can clearly define either a downward sloping neckline like that one there, or key swing highs like this one and this one. So on this chart, we have an inverse head and shoulders pattern. We've got a swing high, which is broken there. Amazing. Not great risk to reward in between here and the next trouble area, which is this swing high here. All good. I'll wait. Candle body closed there. Not amazing. Sort of looks a bit like a rejection. So I'll wait again. That patience potentially is going to cost me a nice little silver entry here. I've got this risk to reward tool drawn in here. That would have been ideally where I would have liked to enter a silver long. Hasn't given it to me yet. Could still retrace, reject here, give me an entry and still look clean. Otherwise, I may need to employ a similar thesis to gold, which is what I mentioned before, which is this market structure. That's basically going to be higher highs and higher lows, which you can see here. Once we drop down onto the 4-hour time frame, we have a clean break and retest of that daily level there. We just looked at that on the daily time frame. That's that swing high there. Clean break and retest, deceleration on that level, 4-hour bullish engulfing, little bit of choppiness there, and then bang into new highs. And then again, a little bit of a retracement, and we're pushing up, potentially going to make new highs above here. Maybe we see a little bit of follow through in New York session. Maybe that lines up with the CPI release. Nonetheless, to summarize and in summary of what we've just spoken about, it is my opinion that the commodities retracement and range-bound price action is now coming to a close. I think there could be, or could stand to be, some good opportunities in gold and silver in the coming weeks and months. You can see here we've got an 85% move on silver back to all-time highs. We have a I'll tell you when my chart loads. We have a 26% move on gold back to all-time highs. It is my opinion that there are some good risk to reward upside positions on these two asset classes in the coming weeks. And I wanted to cover this video because I feel like it's still early. People still aren't talking about it. Everybody's waiting for crypto to break out of its range, which it has not done yet. And it does not appear to be doing so yet. All the time, these asset classes are up almost 10% in a week each. So I wanted to make a video on that. This is my thesis. This is my prediction of what I think is going to occur in the commodities markets over the next couple of weeks. If you're interested in content like this and you like content like this, follow the channel. We are posting some more long form videos. We're dropping short form videos. We've obviously got our QT community. There's heaps of details about that in the bio. I hope you found this video valuable. I hope it is of interest to those who watch it. And with that being said, thanks for watching, and I'll see you guys in the next one.